Hey savvy investors of Singapore, it's Iggy from Investing Iguana. Today, we're delving into Mapletree Industrial Trust's, MIT, latest earnings release for the third quarter of fiscal 2024. In this video, Mapletree Industrial Trust's latest earnings, what investors need to know, I'm going to unveil the key highlights and what they mean for your investment journey. We'll explore MIT's financial performance, how it's weathering the challenges of inflation and interest rates, and what its occupancy and debt metrics tell us about its future. So, buckle up as we dissect the numbers and trends that could shape your investment decisions in one of Singapore's leading REITs. 1. Steady DPU amidst challenges. Mapletree Industrial Trust, MIT, has demonstrated remarkable resilience in the third quarter of the fiscal year 2024, despite facing significant challenges such as inflation and higher interest rates. The gross revenue for this period saw a 2% increase from the previous year, amounting to 173.9 million Singapore dollars. This increase can be attributed to the contributions from the data center located in Osaka and the leases from Mapletree High-Tech Park situated at Khao Lang Way. The net property income and distributable income also experienced modest increases. However, the distribution per unit, DPU, experienced a slight decrease of 0.9%. This decrease was due to the issuance of more units during this period. Despite this minor setback, there is still good news. The DPU saw an increase when compared to the previous quarter, indicating a positive trend. Additionally, the borrowing costs have stabilized, which is a promising sign for the future financial stability of MIT. This overall performance showcases the trust's ability to navigate through challenging economic conditions and still deliver steady results. 2. Occupancy and lease metrics. In terms of occupancy and lease metrics, Mapletree Industrial Trust, MIT, experienced a slight decrease in its occupancy rate, which fell to 92.6%. This means that a small percentage of their properties were unoccupied during this period. However, it's important to note that an occupancy rate of over 90% is still considered healthy in the real estate industry, indicating that the majority of MIT's properties are generating income. On the other hand, the weighted average lease expiry by gross rental income, which is a measure of the average time remaining on the leases in MIT's portfolio, improved to 4.4 years. This is a positive sign as it suggests that MIT has secured rental income for the next few years, providing a certain level of financial stability. The slight dip in the occupancy rate coupled with the improvement in the average lease expiry indicates a strategic balancing act by MIT. While they strive to maintain high occupancy rates for immediate income, they are also focusing on securing long-term leases. This strategy ensures a steady flow of rental income over a longer period, thereby enhancing the trust's financial stability and resilience against market fluctuations. This careful balance between short-term occupancy rates and long-term leasing stability is a key aspect of MIT's strategic management of its property portfolio. 3. Debt management. When it comes to managing its debt, Mapletree Industrial Trust, MIT, has shown a slight increase in its aggregate leverage, which is the ratio of its total debt to its total assets. This ratio has risen from 37.9% to 38.6%. While an increase in leverage might indicate a higher level of risk, it can also be a sign of strategic investment for future growth. In terms of the debt maturity profile, which refers to the timeline for the repayment of its debts, MIT has a well-spread profile. Most of its loans are set to mature between the fiscal years of 2026 and 2028. This spread-out maturity profile is beneficial as it reduces the risk of having to repay a large amount of debt at once. Furthermore, MIT has managed to decrease its cost of debt. The cost of debt is the effective interest rate a company pays on its debts. A decrease in this cost means that MIT is now paying less interest on its debts, which can improve its net income and cash flow. Intrinsically, there has been a slight increase in MIT's fixed-rate debt. Fixed-rate debt refers to loans that have a fixed interest rate for the life of the loan. This can be advantageous as it provides predictability in debt servicing costs, regardless of market interest rate fluctuations. Lastly, these factors contribute to a healthy interest coverage ratio for MIT. The interest coverage ratio is a measure of a company's ability to meet its interest payments on outstanding debt. A healthy ratio indicates that MIT is well positioned to meet its debt obligations, further enhancing its financial stability. In summary, despite the slight increase in leverage, MIT's strategic debt management, characterized by a well-spread debt maturity profile, a decrease in the cost of debt, an increase in fixed-rate debt, and a healthy interest coverage ratio, underscores its robust financial management. This approach helps ensure the trust's resilience in the face of economic uncertainties. 4. Rental reversions and tenant retention. Mapletree Industrial Trust, MIT, a real estate investment trust, REIT, specializing in industrial properties, has reported positive rental reversions across all its property segments. Rental reversion refers to the increase or decrease in rental rates when leases are renewed. Positive rental reversion means that the new leases are being signed at higher rates than the expiring ones, which is a good sign for the trust's revenue growth. In addition to this, MIT has managed to maintain an impressive tenant retention rate. Tenant retention rate is a measure of how many tenants choose to renew their leases at the end of their lease term. A high tenant retention rate is beneficial for a REIT as it reduces the costs and time associated with finding new tenants, and it also provides a more stable and predictable rental income. Furthermore, MIT has a diverse tenant portfolio, which is a significant strength for any REIT. Having a diverse tenant base reduces the risk associated with any single tenant's inability to pay rent or deciding to vacate the property. In MIT's case, its largest tenant, HP Incorporation, constitutes only 6% of its gross rental income. This means that even if HP Incorporation were to leave, the impact on MIT's overall rental income would be relatively small. In the grand scheme of things, the positive rental reversions, high tenant retention rate, and diverse tenant portfolio all contribute to the robustness of MIT's operations. These factors not only provide a steady stream of income for the trust, but also help mitigate risks associated with tenant turnover and market volatility. This demonstrates MIT's strategic approach to property management and its commitment to delivering stable returns for its investors. 5. Future prospects. Looking ahead, the management of Mapletree Industrial Trust, MIT, is mindful of the potential challenges posed by the global economic slowdown and other associated risks. However, the trust's strong performance indicators, such as high occupancy rates and positive rental reversions, provide a degree of reassurance about its future prospects. High occupancy rates indicate that a significant portion of MIT's properties are rented out, ensuring a steady stream of rental income. Positive rental reversions, which mean that new leases are being signed at higher rates than the expiring ones, suggest potential for increased revenue in the future. In addition to these encouraging signs, MIT has outlined several strategic plans that further underscore its proactive approach to management. These include accretive acquisitions, which are purchases of properties that are expected to increase the trust's earnings per unit. Such acquisitions can enhance the value of the trust and provide higher returns for investors. MIT also plans for selective divestments, which involve selling off properties that no longer align with the trust's strategic objectives or do not contribute significantly to its earnings. This strategy allows MIT to streamline its portfolio and focus on properties that offer the best returns. Furthermore, MIT places a strong emphasis on tenant retention. By keeping its existing tenants, the trust can save on the costs and time associated with finding new tenants, while also maintaining a stable source of rental income. Despite the cautious outlook due to the uncertain global economic landscape, MIT's robust performance metrics and strategic plans for the future paint a picture of a trust that is well-positioned to navigate through potential challenges. Its focus on accretive acquisitions, selective divestments, and tenant retention demonstrates a proactive and strategic approach to management aimed at ensuring steady returns and long-term growth for its investors. 6. Mapletree High-Tech Park's potential. Mapletree High-Tech Park, which has recently undergone redevelopment, presents a significant potential for Mapletree Industrial Trust, MIT. Currently, the committed occupancy rate at this park stands at 51.3%. This means that a little over half of the available space in the park is currently leased out to tenants. While this might seem like a moderate occupancy rate, it's important to remember that the park has just been redeveloped. It's quite common for newly redeveloped properties to take some time before they reach high occupancy rates. As more businesses become aware of the facilities and advantages offered by the park, it's likely that the occupancy rate will increase. Any future rise in occupancy at Mapletree High-Tech Park could significantly boost MIT's rental income. As more units in the park are rented out, the rental income generated from this property will increase. This could have a substantial positive impact on MIT's overall revenue. Moreover, the fact that the park is described as high-tech suggests that it may be attracting tenants from the technology sector, which is a rapidly growing industry. If this is the case, the park could benefit from the robust growth in this sector, further enhancing its potential to contribute to MIT's rental income. Iggy's analysis for Mapletree Industrial Trust in 2024. First off, MIT's latest earnings for the third quarter of fiscal 2024 reveal a resilient performance in the face of economic challenges like inflation and rising interest rates. With a year-on-year gross revenue increase and a stable net property income, MIT is showing signs of weathering the storm. But there's a twist. The distribution per unit, DPU, saw a slight dip due to an increase in total issued units. This indicates a delicate balance between growth and shareholder returns. A critical aspect of MIT's health is its occupancy rates. As of December 31, 2023, there's a slight decrease in occupancy. This dip, primarily in data centers and light industrial buildings, is partly offset by higher occupancy in high-tech buildings. It suggests a shift in demand within MIT's portfolio. On the debt front, the REIT's aggregate leverage edged up, but the debt maturity profile remains well spread, reducing immediate financial pressures. MIT's positive rental reversions across all property segments are a bright spot. This implies that MIT is not just retaining tenants but also successfully negotiating higher rents. Coupled with a high tenant retention rate, these factors point to a strong demand for MIT's properties and its effectiveness in property management. Looking ahead, there are several factors that investors should consider. The slight increase in borrowing costs, despite stable finance expenses, could impact MIT's bottom line. However, the REIT's cautious approach to managing its portfolio through accretive acquisitions and divestments suggests a strategy focused on long-term value creation rather than short-term gains. The performance of Mapletree Industrial Trust, MIT, is closely tied to the global economic climate, especially the rate at which the world is recovering from the pandemic. As the economies of Singapore and its surrounding regions start to bounce back, we can expect a surge in industrial and commercial activities. This is good news for MIT, as it has a diverse portfolio that stands to benefit from such an upturn. Investors should approach this situation with cautious optimism. The latest results from MIT show a strong ability to withstand challenges and adapt to fluctuating market conditions. This resilience is a positive sign for potential investors. However, it's important to remember that the broader economic environment plays a significant role in MIT's performance. Factors such as the pace of economic recovery and the stability of the real estate market can greatly impact the real estate investment trust's REIT performance. Another crucial factor to consider is MIT's ability to continue its positive rental reversion trend. Rental reversion refers to the increase in rental rates when a property is released to the same or a new tenant. A positive trend in rental reversion indicates that the REIT is able to secure higher rents over time, which can contribute to its overall income growth. In summary, despite the macroeconomic challenges, MIT's financials are encouraging, demonstrating resilience and potential for growth. And there you have it, folks, a comprehensive breakdown of Mapletree Industrial Trust's latest financial performance. We've unpacked the earnings report to give you a clearer picture of what to expect from MIT in the coming months. Whether you're considering investing in MIT or are already a shareholder, these insights are crucial in navigating the complex world of REITs. Did you find this analysis useful? If so, please give this video a thumbs up and share it with your fellow investors. Your support helps us continue to bring you valuable insights in the world of investing. Don't forget to hit the subscribe button and turn on notifications for Investing Iguana to stay updated with the latest market trends and investment strategies. Until next time, keep investing smart and stay ahead of the curve. This is Iggy, signing off. Happy investing.